Hello people, a very happy evening to all of you. So guys, today we are beginning with a new series of chapters which is called as partnership series. So guys, this series will comprise of total 7 seasons and each season will comprise of this many episodes. The moment I say series, season, episodes, now I can see some bright shining stars in the eyes. I think some of your old memories are getting refreshed. So yes, you heard me right, guys. We have total 7 chapters, and each chapter is going to take this much, class to complete. Online people, please mute your background. Yeah, thank you. So the first chapter under the partnership series that we're going to see is basically accounting for partnership firm fundamentals. In other words, we're going to see the fundamentals of partnership firm. So before we even understand what is fundamentals, we have to first of all understand what is partnership firm. Why is a partnership firm first of all, existing? So that we have to understand. So if you recollect, in 11th standard, we understood how do we do accounting for a sole proprietorship concern. So what does a sole proprietorship concern means? It means that he's a person who has got an idea or a thought process of doing a business. Point number 1. Point number 2, he is the person who will raise capital, who will raise investment to do the business. Third point, he is the person who will do the management of the complete business. Fourth one, he is the person who will reap the complete profit at the end of the year. So this is called as one-man show. But in the sole proprietorship concern, there are certain inherent limitations or there are certain constraints where people cannot further continue in that form of business and they would look up to something else so that they can overcome those constraints. In other words, in sole proprietorship concern, when you operate as a single person, you will face a lot of difficulties. To overcome those difficulties, there is something called as partnership firm that has been created or formed. In India, for one to do the business, you have to have a particular form or a body or a type in which you can operate your business. So on the left hand side, you will see these are the various forms of a profit-making organization. That is, if you want to run an organization which is profit-making, you can have typically these kind of forms or body. If you want to have, a non-for-profit organization, you want to run an organization where the motive is not to make profit, then these are the forms of the body in which you can operate. So I'm not discussing this. We'll be discussing this. In this, the very first form is sole proprietorship concern. So what is a sole proprietorship concern? And how do we do the accounting for it? We have studied already in your 11th standard, once upon a time. So now there are certain inherent limitations in this structure. Therefore, people look up to forming a partnership concern. So we are going to learn what is a partnership concern. How do we do accounting for a partnership concern? Now, partnership concern also suffers from some certain inherent limitations. To overcome that, we have something called as LLP, Limited Liability Partnership. So this is also a partnership concern, but the feature is slightly varying compared to the normal partnership concern. In LLP, there are certain constraints. To overcome that, we have something called as companies. So companies, again, 3 different types. So we'll again be studying companies in the second volume. So in your 12th standard, guys, in your 12th standard, you'll be studying about partnership, which is point number 2, and about the companies. So partnership, you'll be studying in volume 1 of your TS Grewal, and companies you'll be studying in the volume 2 of your TS Grewal, and so on and so forth. So HUF is the next type of an organization or a firm in which you can do the business. So we are not getting into all that. Now, let's understand what are the various constraints as a sole business owner you can face. The first constraint that you can face, in a sole proprietorship concern business is capital constraint. Capital constraint. All of you understand what is the meaning of a constraint? Okay. Online people, all of you able to follow what I'm saying?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Okay. So very simple. I'll give an example. This is FFLA, Fortune's Fun Learning Academy, which is currently operating only in Coimbatore city. So now we have completed 4 successful years of FFLA and we are now stepping into 5th year. So let's suppose in these 5 years, we have successfully established, ourselves. As long as accounting is concerned, not me, you guys say that, we are the number 1, right? So very soon we want to become number 1 pan India. So for that, what am I supposed to do? I have to take all this across various cities. So now FFLA from 6th year onwards wants to start branches. Okay, wants to start branches across 20 different places. Okay. Now to set up one particular branch, it will cost, let's suppose, 20 lakh rupees. So what is the total capital that is required for me to set up all the 20 establishments? 4 crore. Who said 40 lakh? 4 crore rupees. Single person contributing 4 crore rupees. Is it easy or is it difficult? Yeah, I mean, exceptional cases are there, like Mridula. Okay, other than that category, 4 crore for an average person, 4 crores is a constraint. Like spending 4 crore, I mean, exceptional cases. Okay, fine. If you're Ambani, Adanis, and if you're Mridulas, then things could be different. 4 crores is not a matter. Just one, check sign, game over. That's a different, call. But again, online people, do you agree that 4 crore rupees, for an average person, investing this money is a bit challenging?
Yes, sir.
Yes.
Yes, sir.
So as a sole business owner, you might face constraint in the capital. You might have a little, less investment, when you work as a sole owner or a sole businessman. So to overcome this constraint, people prefer partnering. So I'll take one more partner of, my equal level or caliber, and I'll take raise funds from his side. Let's say I'm putting 2 crore rupees and the other person is putting 2 crore rupees. So by that virtue, a partnership business is being formed. You might have a doubt in your mind, sir, if funds is a problem, why do you need to take a owner? Why do you have to take a partner? And why are you sharing your profits? Instead, why don't you go to the banker and raise the loan? You take a loan. Yes, online people, do you agree with me? Loan is an option, right? Why is it that I have to go and search for a partner? Because I'm taking a partner, I have to share my profits. If that is the case, so why not go for a loan? The reason why people don't go for a loan is because right from day one, when you get the money into your bank account, whether you invest that money in the business or not, whether you have started earning the money from the business or not, you have to start paying interest. So that might have a mental pressure on you that could, deviate you from the focus of the business. That's why some people don't prefer going for a loan. Yeah, some people go for definitely for a loan if they feel that they have a stable income throughout. But this is not about a stable income. Stable income is there in Coimbatore branch. How about other branches? We're going to start afresh. In those cities, people don't know FFLA. So you have to do a lot of groundwork there. It might take 2 or 3 years for you to, even touch the break even. You know what is the break even point? No profit, no loss. Which means whatever money I'm spending, that much money I'm earning, same amount. That is called as break even. No profit, no loss. So it might take even 2 or 3 years to even break even. So until that period, if I take a loan, I have to keep on paying interest. So it will be a burden on my head. On the other hand, if I go with a partner, I'll have to give him the profits only if the business is started making the profits. So until that, I don't have to pay him a single money. So can I say without any mental pressure, I can focus on my business and develop the business? So that's why people prefer going for a partner instead of going for a loan. So one constraint was capital constraint in the sole proprietorship business. The second constraint in the sole proprietorship concern was the management constraint. See, now as a single person, you can manage, let's say 1 branch, 2 branch, 3 branch, at the max 5 branch. When you're managing a branch, it's not top level management or top level, just viewing. You have to get into the minute things. You have to do the micromanagement. So one single person cannot do micromanagement for all the branches across India. He has got certain limited constraint. If I give you the responsibility for managing, will you manage all the 20 branches by yourself? Every branch will have some problem day in and day out. Every branch will have some problem. So will you look at this problem or will you look at that problem? 5 branch or 5 regions if you manage, so that itself is a big task. You'll have sleepless nights. On top of that, if I give you 20 branches, you're gone. So You might say, sir, what is the big deal in this? Why do you need a partner for this? Take an employee now, hire an employee. One thing you have to understand, owner, the way he takes care of his business will be different from, the way the employee will take care. See, as a parent, the way I will take care of my child, will any guardian take care of that particular kid the same way? Obviously not. So when an owner is stepping in, when an equal partner is stepping in and managing the business, his ownership will be different, his accountability will be different, the way he'll responsibly handle things will be different. So there's a lot of difference in a way when a partner handles the business versus if the same thing is handled by an employee. The employee will not work beyond 6:30, will say. A owner will work even till 12 o'clock in the midnight. So there is a difference between employee and the management. So if I don't want, as a MD of this organization, or as the core partner of this organization, if I don't want to get into all this headache, it is better I take a partner, give him a share of profit, and give him his own roles and responsibilities so that he will take care of all that. It will not come to my head. In sole proprietorship concern, that flexibility is not there because only one owner, one person is going to reap the profit. What will you get in that? So this was the second constraint in the sole proprietorship concern. To overcome that, people form partnership. The third is risk. See, when I'm operating one branch, risk is limited. When I'm now opening additional 20 branches, what is the guarantee that you will 100% succeed? In Coimbatore, I'm taking care of that. Okay, fine. What is the guarantee that if you open 20 other branches, it will have the same success model? Out of 20 branches, even 2 can go for a flop, no? Because in that 2 cities, who's dominating already there, who knows? So there is a risk involved. So now I don't have that much risk appetite. I don't have that much risk taking capacity. So I will hunt another person who's filthy rich, who's got that risk taking appetite. So I will go and propose this business model to him. If he likes, if he's willing to take a risk, he will come on board as a partner. So that way, I am overcoming the risk constraint. If I'm going as a sole owner, then the entire risk of the business, failure of the business will fall on my head. When the other person is there, I'm having that another person to share the loss of the business. Risk here is what? Loss now. What is the risk in the business? At the most, what is the worst case scenario? Loss. Your capital gets eroded away. So that risk constraint has been addressed. So sometimes people go for a partnership because they want an expert. Let's suppose I want to start a software company. Now I'm a commerce, background person. I'm a chartered accountant. I have no single clue about how do we develop a software. So I have a very strong business model. And I know if this is implemented, if my idea is implemented properly, it is going to be $1 million company. But I don't know how to do that. So I will need to take, an expert people. So if you take expert people on salary basis, you'll have to shell out crores of rupees initially. If I'm going to hire, let's suppose a web developer or app developer, who's the top guy, we'll have to pay him as good as 5 to 10 lakh rupees a month. So that will have an initial capital burden. Instead, if I take him as a partner, one, I don't have to pay him anything significantly. Almost 60-70% I can slash his salary. And moreover, I can make him responsible for all the good and bad that is developed in the software. A person who's coming on job, if he does not justify his job role, if he's not working properly, at the max, what can you do? You can throw him out of the business. Ultimately, who will be responsible for the failure? We, as a single owner. But when you take that expert also as a business partner, if he's doing something wrong, you can make him equally responsible for that loss. So if you want an expertise, take a owner who will own what he is doing. And if you have more than one owner, obviously it is not possible in the sole proprietorship concern, because in sole proprietorship concern, there can be only one owner. If you want more than one owner, then you have to look up to partnership or LLP or companies. So this is a basic idea behind why there is a partnership form of business coming into the picture. Clear or not clear? Tell me first.
Yes.
Clear.
Yes, sir.
Constraints are
Yes, sir.
I'm giving here very sample, 4 sample constraints. Like that, there are so many constraints we can discuss about. And these constraints are nowhere related to your syllabus. So I'm not getting into that detail. Now, why did I discuss this? Basically to give an idea Why are we learning partnership? If somebody asks you why partnership, these 4 points at least you'll be able to tell now. So for that, I give you a simple point to remember. But if you go in depth, there's so many other constraints as well. So we are not discussing all that. Am I clear? Okay. Online people, can we move on? Please
Yes,
continue.
sir.
Yes, sir.
Fantastic. Now, guys, meaning and definition of partnership. Now, there are two terms, meaning and definition. You got to be very, very careful here. When you say that the meaning of something is so and so, you can write anything on your own words, but the point should be relevant for you to get the appropriate marks. So meaning means you have to write the appropriate points in your own language and you'll be able to thrive. But when somebody tells you, write a particular definition or define something, which means that you cannot write anything on your own word. Whatever definition is given in the law, you will write same thing as it is without even a single change of letter. Define means what? Somebody else is already given his definition of partnership. So that only we are going to copy paste. So definition means copy paste as it is. Meaning means what? You can write and explain that particular point in your own language. So are you clear with the difference between meaning and definition? You might get a theory, 1 mark. Explain the meaning of partnership. You can write it in your own language. But if they tell you on the contrary, define partnership, then you will not write whatever you feel like writing. You will write what is mentioned in your textbook. This is what you will write. Partnership is defined in Indian Partnership Act 1932. Now, Indian Partnership Act 1932. Can somebody tell me what this could be? I'm asking you, what is this act? What is act? What does act means?
It's a law, sir.
It's a law book. It's a rules and regulations book. If I have to tell you in the local language, local meaning, it is basically a rule book. See, all of us are surrounded by lots of rules and regulations. See, today you are in this premises. You are bound by the rules of FFLA. The moment you step out of this building, you will be bound by the rules and regulations of this building. The moment you step out of the building on the road, you have to take care of the rules and regulations laid down by the RTO, road transports. The moment you step into your building or apartment, you have to take care of your apartment ka rules and regulations. The moment you step into your house, the rules and regulations laid down by your dad, that will follow. The moment you step into your room, then the rules and regulations laid down by all of you, you will follow. So we are surrounded by rules and regulations. So same way in business also, there are so many rules and regulations that has been laid down. Why rules are kept in place? So that everybody will unanimously follow that. And the end result or the desired result should be the same. If rule is not there, people will do what they feel like doing and everything will be a total mess. So to avoid a messy situation, government will create laws. So now when you are creating a partnership concern, during that process or after forming a partnership until the partnership is closed, you will come across a lot of queries. So all your queries will be satisfied by which rule book? It will be satisfied by the rule book named Indian Partnership Act 1932. What is the significance of this 1932? 1932 is the year when this rule book was formed. Sir, are we going to follow 32 ka rule book? I mean, 1932 means what? Next 9 years, it will be 100 years. We'll do 100 birthday celebration for this. So are we following that old, laws? Yes. But again, having said that, this is 90-year-old law. Law will keep on, updating itself every now and then. So a lot of amendments will be happening to this law, right? So though it is an act that has been established in 1932, but since then till today, taking today's scenario into consideration, a lot of amendments would have kept on happening. And with that amendments and updates only, you're studying this today. Am I clear? In that section 4, so in every law book, guys, you'll have multiple sections. So each section number. So for example, if I want to know this particular point is mentioned where will you go and search? Law book is this big. If I want to know this particular point is where, how will you go and search? So to make your searching journey easy, they quote sections. Section number. Now, for example, if I take Bhavyansh, in India, so many Bhavyansh are there. So how will I identify Bhavyansh? By his PAN card number or Aadhaar number. Correct, no? Like that in the rule book, at so many places, so many things are mentioned. So if I want to know where the partnership is defined, where will I go? I'll go to section 4. So section 4 of Indian Partnership Act defines partnership. It says that partnership is a relation, not relationship. Now, why I'm telling this is because you don't think that relationship. Why I'm telling is because in your seniors, we ask define partnership for 1 mark. What is the word given here? Relation. I don't know while writing what happened to them. They write relationship. What relationship? I don't understand. In definition, you cannot even alter a letter. That guy changed to full definition. Relationship. Relation. Partnership is the relation between persons. Persons means what? 2 or more people. 2 or more. That is more than 1. Who have agreed to share the profits of the business. So 2 people who are coming together as a partner. What is the intention? To share the profits and loss of the business. And that business is carried on by all. So if there are 2 partners, A, B, both of them are equally responsible for carrying out the business. Or any one of them, one is missing. I'm adding that one for your understanding. Any one of them acting for all. So let's suppose there are 3 partners, A, B, and C. B and C are filthy rich people. They don't want to work. They only want to invest the capital and they want to stay idle. So why will I say no? Because I'm getting money from them. So I'll tell, okay, you give me money. You're giving me Lakshmi. What more than that I want? You stay nicely in your AC room and enjoy. I will run for you. I will run the business for you. At the end of the year, I'll come and give you all the profits. Not all the profits, little bit profits. So either A, B, C, all the 3 of them will work equally hard, or A will work on behalf of B and C. Any problem? The person who's actively working is called as an active partner. The person who's A, who's working on behalf of everyone, that guy is called as an active partner, participating partner. B and C, who have just contributed in money and left, those are called as sleeping partner. Sleeping partner does not mean that he's sleeping throughout the year. Like in WhatsApp, we put the status, no, sleeping. As if this guy is sleeping throughout the year. No. Sleeping means he is not actively participating in the management of the business. He is not participating in the management of the business. He has just invested money and is sitting back, relaxed back nicely and watching the show. Am I clear? So business carried on by all the partners or any of them acting for all. So one partner is acting. Acting means doing all the activities on behalf of all the other partners. So please make a note of this point. Section 4, you might get a direct question for 1 mark. Define partnership. I'm telling you from the board examination point of view. Define partnership for 1 mark. So you will write the same language as it is without even a single letter change. Sir, do we need to buy all the sections even in the textbook? The answer is no. Wherever I tell you to buy that alone, if you buy it, is more than sufficient. So this particular point, you will take a highlighter and highlight this point. Online people, okay, not okay?
Okay, sir.
Okay, sir.
Everybody, hello.
Yes, sir.
Okay, sir.
People have not switched on the video. Abhishek,
Yes, sir.
and Ananya video is switched off. Hari video is switched off. Purvi video is switched off. Please switch it on. Guys, shh. Recording is getting disturbed. Yes, boss.
Sir, I have a doubt.
Yes, boss.
Sir, if all the partners are sleeping partners, how the owner will overcome the constraint of management?
Okay, you mean to say, okay, guys, listen. There's a beautiful question that has been raised by Lakshana. She says that, sir, A, B, and C are 3 partners. Now, if B and C are sleeping, which means the entire burden of managing the business will fall on A, that will lead to management constraint. So how will you overcome that management constraint is what Lakshana is asking. Now, Lakshana, if management would have been constrained, then all the 3 would have been working. If A is taking the responsibility on behalf of the other 2 people, which means that in this particular business model, there is no management constraint only. Had there been a management constraint, then why will A allow B and C to be sleeping partner? You get my point?
Yes, sir.
Since there is no management constraint, that's why they have asked them to sleep nicely. Satisfied?
Yes, Yes, sir.
Now, very simple, guys. FFLA, Pratik sir. Virat Kohli is very much, liking my business model. So Virat Kohli wants to come on board as a business partner. Don't laugh. It can happen. Be positive. 5 crore rupees is giving me. If I tell Virat Kohli, sir, go to Hyderabad, manage this. Go to, Delhi and manage this. Will that guy go around and manage? Touch your heart and tell me. He will kick me out. He is giving money itself is a big thing because his face is a brand value for me. More than that, what I want. For the 5 crore rupees, what he's giving, no, I'll nicely manage. I'll itself manage. Looking at Virat Kohli sir's, brand value, a lot of people will come and work with me for lesser salary because they can get free autograph and photographs. So when management constraint is not there, then only the situation will happen. Now, a partnership, thus as a business relationship is coming here, which means if you are asked what is the meaning of a partnership, there you can do all the alterations what you want. Relation can become a relationship also. I have no problem. You do whatever relationship you want to do with the partnership. But when it is definition, it has to be the same word, no alterations. A partnership thus is a business of relationship between or among two or more persons. Because if only one person is there, then what partnership? If one person means sole partnership. More than one, which means two. Two or more means partnership. So two or more people come together to share the profits and loss of the business, carried on by all or any of them acting for all. Now, this is what is called as a meaning of a partnership concept. So this is definition. This is meaning. Any problem? Yes, boss. Now, there's a good question that what is the difference between relation and relationship? Anybody want to answer this? I feel, yeah. Tell. Some brain people. Anything related to accounting. You ask, I'll answer. Relationship is something which has got to do with English. I cannot comment on this. Now, why I'm saying, no, listen. My funda is very clear. In definition, they have given the word relation. So I'll not put relationship there. Otherwise, you do whatever you want to do in a relationship. I will not interfere in that. But this query alone, I'll not be able to answer because this is out of my expertise. So for that reason, I'm out. Partners, firm and firm name. The person who have entered into partnership, the persons who have entered into partnership with one another are individually called as partners. So A, B, C, all the three of them individually are called as partners. And they are together, that is collectively they are called as firm. If I just say firm, then in India, how many firms will be there? So we should have a name given now to identify, this firm is like this. So I have to give a name. So for that firm, if you give a name to it, if you give a unique name to it, that becomes a firm name. The name under which the business is carried on is called as firm name. So let's suppose in FFLA, ABC are three partners. So ABC are called as partners. Three of them are collectively called as firm. The type of the business is called as a firm. We don't call it as a partnership company. We call it as a partnership firm. Firm means partnership. Collectively called as firm. And this should have an individual name given called as firm name, which is Fortune's Fun Learning Academy. Clear with this? Online people, clear with this?
Yes, sir.
Yes, sir.
Now, this point is very, very important. What is important, I'll tell you. And 100%, there's a short question coming from the segment. Partnership from the legal viewpoint. Legal means what? Law. In viewpoint of law. Is not a separate legal entity from its partners. What is separate legal entity? We've studied once upon a time in 11th standard. There's something called as business entity concept, accounting entity concept. Which means when you do the accounting should be done from the business viewpoint, not from the owner's viewpoint. If that differentiation was not there, what will happen? All the personal expenditure also you will start recording in the business. Imagine if the business entity concept would have not been there. The expenditure that I'm going and making for movies, popcorns, everything will be a part of your business expenditure. So law said that, no, not accounting said that. Accounting said that personal expenditures, personal transaction should not reflect in the business. For that reason, I'm giving a rule saying that owner is different, business is different. So whatever expenditure, income, expense, gain, loss that the business is incurring, only you're supposed to record. That is a concept called as business entity concept given by whom? Accounting standard. Law says that we will not differentiate, which means what? If firm does something wrong, something illegal, we cannot put firm behind the jail, no? Can you tell firm, come on, I'm arresting you, go to jail? Can court give 6 months sentence for the firm? So the person who's representing the firm, who is that? Partner. So partner will be jailed. So law says that, hello, accounting, for your viewpoint, business will be different, owner will be different. But for me, business and the owner both are same. If business does anything wrong or illegal, it is as good as the partner is doing that wrong or illegal. And partner will be penalized, punished, or even prosecuted. Hello, is it clear? Online people, am I clear?
Yes, sir.
Yes, sir.
Yes, sir.
If firm is taking any loan, and if firm is not repaying that loan back, in that case, the banker will attack the private assets of the owner also, which means ABC are 3 partners. They've taken a loan of 10 crore rupees from Dena Bank. So Dena Bank say you took money. Dena karke you took full money. Now, firm does not have sufficient money to repay back. So what can the bank do? Whatever money the banker can recover from the firm, they'll recover. Let's say from the firm, they could recover 2 crore rupees, or let's say 3 crore rupees. They will recover. So 10 minus 3, no, let's say 4 crore rupees is recovered. Out of 10 crore, from firm, we have recovered 4 crore. What is the balance unrecovered money? 6 crore. Now, if you think that the banker is gone bankrupt, then my dear friends, you're wrong. In partnership, there is a leakage. There is a flaw. The flaw here is that the liability of a partner is unlimited. Which means for the balance 6 crores, if the firm is not able to arrange the funds, the banker will go and attack the private assets of the A, B, and C. Partners' private assets, which has got nothing to do with the business. Those private assets will be attached. From that, the money will be recovered. So let's suppose A, B, and C, all of them put together are having 20 crore worth of property. So they will sell that property. From that, they will recover 6 crores and give it to bank. Remaining 14 crores will go to the owner itself. Yes, you are a doubt, Kana. Sorry? Now the question is, sir, 6 crore rupees is the shortfall, the shortage. You are going to the, the house of the owners to recover money. Now you look at the balance sheet. They're having only 1 crore worth of asset. All the 3 partners put together, they are having only 1 crore worth of assets. Now, can I say there is a further shortfall? That is the question what Nithila asked. Correct? Now, the banker at most can recover that 1 crore only. Now here, the balance 5 crore is a loss for the banker. Have you heard of this word called as NPA? Non-performing assets. Every year, a lot of bankers declare certain amount as NPA. For example, the loan that was taken by Kingfisher, Vijay Mallya. What happened to that? Nirav Modi case, Punjab National Bank. Gone. Like that, so many, every year, crores and crores of money goes as a NPA, non-performing assets. Gone. Govinda, oh, Govinda only. So the question is, sir, if the private assets are not sufficient to recover, they will recover as much as possible. If there is still a shortfall, then banker will have to take that responsibility. So now here, it is because of this word unlimited liability. See, every business firm will have a certain liability. Here, the liability of a partners are unlimited. The word, mark it very, very important. The partners are having unlimited liability, which means that since the firm's debts are payable from the personal assets, that is, if the assets of the firm are not sufficient to pay the money, then that debt is payable from the personal assets of a partner. In other words, firm's debt are payable from the personal assets of the partner if the firm is unable to repay its liabilities. So banker has taken a loan of, the firm has taken a loan of 10 crore from the banker. Now 4 crore rupees liability is repaid by the firm. So 6 crore firm is not able to repay. So to the extent of 6 crores, the liability of the partner is unlimited. So the one keyword is unlimited. The next keyword is all the partners are jointly and severally liable, which means what? A cannot say that I am not going to pay any money. It is B and C who have gone and taken loan from the banker on behalf of the firm. Like that, A cannot back off. In other words, when the loan was taken 10 crore rupees, it was B and C who went with the bank manager and did all the transaction. But B and C did not take the loan in the personal capacity. They were representing whom? The firm. Firm means what? A, B, C all put together. Now at the time of repayment, A cannot deny telling that no, I didn't know anything about this. I was unaware, so I will not pay anything. Not possible. You cannot take that excuse. So if a liability comes at the later stage, all the partners are jointly liable and with the same severity. And now where is this term given? In your second volume. But somehow this point should have been covered in your first volume, but somehow it is missed out. Nothing to worry. This is very, very important. They will ask you, what is the liability of a partners? What is the liability of a partner or a partnership firm? So what will you write? Liability of a partners are unlimited. Point number one. This is a keyword. Unlimited. And all of them are jointly and severally liable. Only if you write both these points, point number one and point number two, you will get that one full mark. Am I clear? This is a keyword. Please make a note of it.
Sir, one doubt, sir.
Yes, boss.
Sir, what if the same condition applies in the limited liability partnership, sir?
LLP is a different concept. Now, since Suman has raised this point, I'll tell you. We saw various forms of business. No? In that, one was sole proprietorship concern. Second was partnership. Third was LLP. Now, in partnership, there is this constraint. Now, some people are not okay with this constraint. So they will not form partnership. They will instead form LLP, limited liability partnership. So if any partner, now in our case, let's suppose Virat Kohli sir doesn't want to have this unlimited liability, because imagine, no, we are taking the loan. And we are asking Virat Kohli sir to pay the entire loan amount or a part of it loan amount from his assets. How will it be? Are you able to follow? It will not be fair, no? So here, Virat Kohli sir will not prefer partnership. He'll prefer LLP in that case. Am I clear, online people?
Yes,
Yes,
sir.
sir.
Yes, sir.
Yes, sir.
Just a second, people. Yes, people. So we're resuming back. So before we pause the recording, there was a query that was asked, sir, what will happen if there is a LLP? So LLP is a concept where there is limited liability, which means the liability is limited only to the business. Nobody can come and attack your personal assets. So in case of LLP, let's suppose the loan taken was 10 crore. Firm could pay 4 crore. So balance 6 crores cannot be paid by the firm. If that is the situation, then the banker cannot attack. The banker cannot attack the assets of the partners. That is the advantage of LLP. That's why some people don't prefer just partnership. They prefer limited liability partnership, which is LLP. But that is not in our syllabus. We'll not be discussing. But more or less, the accounting is going to be the same. However, partnership is a separate business entity from the accounting viewpoint. Accounting viewpoint says what? Owner is different, business is different. Am I clear with this point? Hello, online people?
Yes, sir.
Yes, sir.
So liability of a partners are unlimited and all the partners are jointly and severally liable. So these are the two keywords that you have to note down.
Sir, can you explain what severally liable means?
Jointly and severally liable is nothing but all the partners are jointly liable. One person cannot say that, no, I'll not take the responsibility of this. He cannot, deny. So all the partners are jointly liable. Severally means what? Equally. All the partners are severally means what? As per the partnership agreement, whatever the ratio of profit is there, whatever the ratio of loss is there, in the very same ratio, the loss will also be distributed. So severally means what? There will be severally in the same manner. One cannot say that, oh no, out of 1 crore rupees of liability from my private assets, I'll pay only 10 lakh rupees. That he cannot define. So every partners are jointly liable, and whatever the liability is there, it will be severely distributed among the partners. Yes. Personal assets. Nine. Okay, there's one question that Tanish is asking. Okay, before that, online, somebody asked me a query. You got your answer for that?
Yes, sir. Thank you.
Okay, Nishka. Now, Tanish is asking a question where, sir, 6 crore rupees is the unsettled liability by the firm. So you're attacking the private assets of the partner. Out of ABC, A alone is having sufficient property. B and C are not having any single property. So will you recover the entire money from only A? The answer is no. How much ever you are able to recover from me. That is, for example, if 6 crores is the liability, all the three partners are equally responsible. So which means what? 2 crore, 2 crore, 2 crore will be the equal split. So from A, maximum that you can recover is only 2 crore. Just because B and C is not having property, you cannot recover the money from the one single person. That is not fair also. So by that virtue, whatever money that person is supposed to pay jointly and severally, that much amount only will recover from his assets. Over and above that, not possible. Am I clear? Now let's move on to the next concept. What are the essential features or the characteristics of partnership? You might get this as a 1 mark or 2 mark questions. So you have to note down, all the side headings, or maybe depending on marks, you might need to note down the side headings, and maybe under that 1 point. So let's understand all the points one by one. The first point is 2 or more person. Basically, they'll ask you a question. In a partnership concern, minimum how much partners, maximum how much partners? Right? So Tanish is saying minimum to maximum 100. The answer is wrong. I'll tell why it is wrong. I'm coming.
So minimum to maximum 50, sir.
50.
Wait. Who gave fees to whom? You gave fees to me. So whose responsibility is to explain? Wait, I'll explain. There must be at least 2% to form a partnership organization. So minimum is क्या कर रहा है उसको? And all such person must be competent to contract. Point to be noted, very, very important. All the person should be competent to contract. Competent to contract means what? They should be in position to execute a valid contract. I'll ask you a simple question. Mental person. When I say mental, example he wants. Come, I'll show you example. Come. Harshit, come. I can give a classic example. Guys, when I say mental person, can you imagine some body structure, face? Not Harshit. Anybody else also is fine. If that mental person signs any contract and give, will you accept? Online people, will you accept a contract that has been executed by a mental person?
No,
Mental can sign on anything and tell anything. I'll give my 10 crore of property to you. Take. He's having 0 property. Can you go to court and tell me? Mental had told me that he'll give me 10 crore property. Now recover and give. What will the court do in that? So which means what? This guy is not competent to contract. So like that, in our country, there are certain people who are not competent to contract. Who says that? The Indian Contract Act. Like that, there is an act. It is saying that there are few people who cannot execute any contracts. So they should be eliminated. So the person who is entering into partnership should be minimum 2. And those minimum people, 2 people, 3 people, 4 people, should be those people who are competent to contract. According to the Indian Contract Act 1872, every person is competent to contract. Every person can execute a contract except the following 2 people. First is person of unsound mind. In a very polished manner, they are telling. I told you in very in Tamil, I've told in raw form. We have told in a very, very polished form. Person of unsound mind means mental. Like that you can write if you want. And Harshit, B, person disqualified by any law. If law says that this guy is not competent to contract, which means if this guy executes any contract that is not going to be valid, like that if the court declares or law declares, then any contract executed by that person is null and void. Null and void means what? Not applicable at all.
So for the second one, does that mean the look from where the person comes to
That one particular person. So these two people are not competent to contract. Yes. 100%. You have to note down, you might get a question. Please mention who are not competent to contract. So you'll have to mention these 2 points, saying that every person in India is competent to contract as per Indian Contract Act 1872, except the following 2 people. So from theory point of view, this is important. Now comes the important point. Maximum number of partners. It is not unlimited. You cannot take 1000 partners in a partnership firm, not possible. So what is the maximum number of people you can join as a partner? Unfortunately, the maximum limit is not stated in the Indian Partnership Act 1932. When the law was framed, they forgot to mention, or they failed to mention, what is the maximum limit. So the Partnership Act 1932 does not prescribe the maximum number of partners in the firm. This is very, very important. So then who is prescribing it? However, the Companies Act 2013 under section 464 empowers the central government to prescribe the number of partners in a firm subject to a maximum of 100. To understand this, I'm not giving you the complete structure, but I'm just giving you a structure. There's something called as Lok Sabha. There's something called as Rajya Sabha. So whenever any law has to be passed, whenever any law has to be made applicable in the country, members of Lok Sabha and members of Rajya Sabha, that is majority members of Lok Sabha and Rajya Sabha, has to give assent to it. They have to approve it. Once these both people say yes, it will go to the president for president's assent for signature. Once the president is giving its signature, it becomes a law. That becomes a law. So under law, only the government will come into picture. So who is top? Government is top or law is top? Law is above. Under law only government is coming. So law means company law. Company law, that is Companies Act 2013, has given a empowerment to central government. Which government? Central government. That you can prescribe the maximum limit for partner. And law said that it cannot be more than 100. So law has given the empowerment to whom? The central government, telling that you decide what will be the maximum limit for partner, but ensure that it should not cross 100. So the maximum upper limit that is set is 100. Now in that, central government has proposed, out of 100, the central government has proposed maximum limit as 50. If central government wants, it can increase to 60. Can it increase to 70? Yes. Can it increase to 80? Yes. Can it increase to 90? Yes. Can it increase to 99? Yes. 100? Yes. 101? Not possible. Because now here the central government is restricted to limit of 100. See, if central government wants to make it more than 100, that is 101, law has to permit and revise this number. Am I clear? So maximum permissible limit given by law to government is 100. In that, the government is opted for 50. Am I loud and clear with this point? Hello, online people?
Yes, sir.
Yes, sir. Yes, sir.
The Companies Act, that is law, empowers the central government to prescribe the number of partners in a firm subject to maximum 100. It should not be more than 100. The central government at present has prescribed maximum number of partner in a firm to be 50. And how did they mention? It is mentioned in the Rule 10 of Companies Miscellaneous Rule of 2014. Sir, do we need to remember this rule? No, not required. What you need to remember is 50 is the maximum limit. So the empowerment that is given to central government is how much? 100. Out of that 100, how much has been prescribed by central government? 50. This language is required. Law has empowered central government with 100 as the maximum limit, in which central government has prescribed how much? 50. That's all, guys. So as a result, today, in today's scenario, a partnership firm cannot have more than 50 partners. Now, this is one of the biggest constraint why people look up to forming companies. Because if I want to, form a business where I need 100 partners, I need 1,000 owners, what will I do? Mukesh Ambani sir, today he's got how many owners? Lakhs of owners. Lakhs of owners, shareholders, owners. All the share, what is the word shareholder? I'll be discussing all in the second volume. Shareholder means what? Owner. In the public limited company, how many owners are there? Thousands and lakhs of owners. Is it possible to form a partnership concern for them? Not possible. So this was a constraint. That was a constraint in the partnership for which the companies has been established. So please tell me, guys, the minimum limit is specified 2 in the partnership, but maximum limit is not specified in the partnership. In Indian Partnership Act 1932, the maximum limit is not specified. So where is the maximum limit specified? In the Companies Act, under Companies Rule. Am I clear? Hello, online people? Yes.
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 What's the difference between the owner and the partner?
Owner, okay. What is the difference between owner and partner? Both are same. Owner is partner, partner is owner. Different name.
We consider as partner.
Shareholder is also owner, partner, but under companies. Different law, different name. Okay, tell me one thing. What is your name? At home, what they call Mridula, or they have pet name? But you don't have pet name.
No, I don't know.
Anybody having pet name here? I'll tell first. You tell. Right? No. So in India, we are obsessed with multiple names. One name is not sufficient. My son, I gave him only one name officially and one name pet name. 2 names. But people are not satisfied with that. 10 relatives, 10 different names. So like that, owner become partner, partner become shareholder, shareholder become member. All are same only. Now clear? Okay. Minor as a partner. A minor can be a partner. A minor can be a partner. A minor, who's a minor? That all of you know, because desperately waiting to be converted to 18. No, online people, all of you know who is a minor?
Yes, sir.
Yes.
So below 18, sir.
Below 18, which means the person has not achieved 18 years of age, is called as a minor. The question is, can a minor be taken as a partner in a partnership firm? The answer is yes. A minor can be added as a partner to the firm for the benefit of the partnership. Can you name any person who's a celebrity at the age of 12, 13, 14? Any Shah Rukh Khan's? Anybody else?
Selena Gomez.
Who all foreign people. Selena Gomez is not 18 still now.
Now she started working.
Now I'm telling at present who is
Greta Thunberg.
Taimur, Saif Ali Khan's son, Taimur Ali Khan. Now let's suppose he turned out to be a brilliant singer, brilliant actor. Now they want to start or make a movie for the benefit of that movie. So that a name, fame will come. So they are taking that one particular minor as a partner, so that if this fellow comes, there'll be a lot of name and fame because some star kid is coming inside. So there'll be a lot of hype that is created around movies. And what is that? They'll attract the attention also. So now they are entering into a partnership. For making a film, they're entering into a partnership. So can Taimur Ali Khan be taken as a partner? Yes, provided it is beneficial for the partnership concern. As long as a minor is benefiting the partnership concern, then yes, you can take minor as a partner. The condition are that minor partner will only enjoy the profits. He will not bear any losses. That is point number 1. A minor can be a partner in the firm, but only in the profits of the firm and not for the losses. So in this example, Taimur Ali Khan, if this venture is profitable, he'll enjoy the profits. But in case if the movie is flop, he will say, I'm not responsible for this. And he'll go. Minor partner on becoming a major. Now, when he completes his 18 year, see, below 18 is a minor. Once he's becoming a major, then he should either accept or refuse the continuation of the partnership. Because what happens, as long as you're minor, who takes the decisions on behalf of you? Your guardian. Your guardian will take the decision on behalf of you. Once you become a major, now you will take the decisions for yourself. So once a minor attains a majority, within 6 months of his attaining majority, he has to either accept that yes, I will continue to remain as a partner, or else he should refuse that I don't want to be a partner. Am I clear? For all those people, those are yawning and sleeping, wake up. A minor can be added to the benefit of a partnership where he will enjoy only profits, no losses. However, a minor upon becoming a major, he has to either accept being a partner or refuse being a partner within 6 months of him becoming major. That is from 6 months of his birthday. He has to accept, okay, I would continue to be a partner. No, or else I'm sorry, I want to back off. If he or she does not decide so, now let's suppose 6 months has passed by. That guy is neither said yes nor no. So what we should assume?
Considered as a partner.
We will consider as yes. So if he or she does not decide, he or she becomes liable for all the actions since he and she becomes partner. So if after 6 months, the minor upon becoming major is silent, whether is accepted or refused. If he's silent on that, it is deemed to be accepted. And by that virtue, after him being major, whatever liability is being undertaken by the partner, the minor will also be responsible now. Because until that minor was minor, no? If any loan that firm is taking, who is responsible? The other people, not the minor. But after this guy becomes a major, and within 6 months, he does not accept it, he becomes a partner by default. And after that, if any loan is taken, this guy also will be held responsible and liable. Okay, not okay. Any queries at this point? Please tell me.
Sir,
Yes, boss.
so after a minor partner becomes a major after 18 years, so that time the partner he has to share the profit and losses of the company, right?
Yes, the moment he attains major, the moment he becomes a major, he becomes a partner of the organization if he does not accept it within 6 months. And by that virtue, whatever the rules and regulations is applicable for all the partners, the same will apply for this guy also. So profits and losses will be shared in the same ratio what has been agreed by the other partners. So if there is any liability loss coming in, loss also he will bear it. Everything will become as a normal partner. Okay?
Yes, sir. Thank you.
Okay. Now, second point, agreement. Now, guys, please understand there are two terms which often people get confused. One is called as agreement. Very, very important from the exam point of view. One is agreement. Second is registration. Agreement can be oral or it can be in writing. Agreement, orally agreed. So let's suppose there are three partners, A, B, and C. All the three agreeing that profits will be equally distributed. Like that, if there is an oral agreement accepted, Indian Partnership Act 1932 does not say the agreement should be only in writing. No, it doesn't say. It says that agreement should be there. Let it be oral or let it be in writing. It is better to have in writing, because if tomorrow there is a conflict of words, what will you do? Evidence is not there. No? So if you want to create an evidence, writing is advisable. But law does not compel. Law says if you want it to be oral, you can keep it oral also. Why I'm stressing on this point is because you might get a question that as per Indian Partnership Act 1932, agreement should 100% compulsory should be in writing. True and false? What will be your response? False. Agreement can be either in oral or in writing. Agreement is what? Agreement is basically a document where all the terms and conditions between the partners is agreed upon. I repeat one more time. Agreement is a document in which the terms and conditions agreed between the partners has been noted down or orally discussed upon. That is called as agreement. So basically, when terms and conditions you capture it, that is called as agreement. Now, what is registration? Now, once you have this agreement, you have to register with the government authority. So under Indian Partnership Act 1932, registration of partnership agreement with the government is not compulsory. Whereas in the second volume, when you come across companies, that the registration is mandatory, because without registration, the company cannot be formed only. When you come to the second volume, when we start discussing about companies, companies cannot be created without registering with the government. But here, you can create a partnership firm without registering with the government. So what do we understand? Registration of the partnership firm with the government is not compulsory, but agreement is compulsory. Agreement is compulsory, but should the agreement be in writing? It can be also in oral. So it can be either oral or it can be in writing. So agreement compulsory has to be there, either oral or writing. But registering of the agreement with the government authorities is not compulsory. Yes, ma'am. That's what I'm telling you. No, if oral agreement is there is no evidence. So that's why people prefer going for writing. Partnership come into existence by an agreement, either written or oral. What is the law saying? There has to be an agreement. Whether that agreement is orally agreed or whether it is in writing, we don't mind, but agreement has to be there. It is the basis of relationship among the partners. Now, basis of relationship means what is the terms and condition between the partners? That has to be stressed upon. And that particular agreement may be for a particular venture. Now here, whatever partnership business you're forming, you can form a partnership business for a particular venture. Now let's suppose all of us together, we are having a very good relationship and bonding. So let's suppose I have in heart of the city 5 acres of land. I don't have it. I'm just telling, imagine. In the heart of the city, I have 5 acres of land. So I'm proposing to all of you that all of you have money, no? Invest 2 crores each. So all of you are 40-50 people. Invest 2 crore each. So let's suppose you are 50 people. 50 people into 2 crores is how much? 100 crore rupees. So I'm going to give land. You are going to give money. So we are entering into a partnership. You are 50 people. Oh no, you are 49 people. I am 150. More than 50 it is not possible. So one me and 49 of you, 50 people. 100 crore rupees we have raised. Now this partnership, will it go forever? This partnership was for a particular venture. What is that venture? Upon constructing the apartment and upon selling the last apartment or last unit of the apartment, the venture purpose is accomplished. And once that last unit has been sold, unit means apartment. Once the last set of apartment is sold, upon the sale of that apartment, the venture is accomplished and you have to close the partnership concern. Unless and until you have to extend it further. If you want to extend it further for a new project, then that's a different case. Otherwise, if there is no intention to extend the contract, then upon accomplishing that venture, the partnership needs to be closed. So that's why they're telling that a partnership, whatever is formed, it is not forever. In the partnership, you can mention that it is for a particular venture. Venture here is construction of apartment, or it could be for a period. You can say that, sir, let's form a partnership and do business for 5 years. At the end of 5th year, if everything goes well, we will cancel this agreement and create a new agreement, extended agreement. But if all does not goes well, at the end of the 5th year, automatically the business will close. So some people start for a particular period. Let's start for 5 years and see. Let's start for a 2 year and see. If it is working out, then we'll extend, or else after 2 years we'll close. So like that, the partnership could be for a specific period also. So these are the 2 specific things. So in some business, there is nothing specific. For example, I want to start FFLA and all of you are coming as a partner. So here, what is that particular venture? When will we accomplish that venture? Because this is not that kind of business model. This will go on forever. Unlike that construction business, the venture is accomplished when? Upon selling the last apartment. Like that here, in the tuition business or coaching business, will that particular point come? And let's suppose you don't want to have this for a period of 5 to 10 years. So you can have this agreement at will. At will means what? As long as you want, you will run the business. Whenever you don't want, you'll close the business. That is called at will. These 3 important points have to be remembered because this will be reflected in future. When you do practical questions, all this will come in future. So all those who are thinking that this theory is time pass, chumma we are studying. It's all important. If this is chumma time pass ke liye there, why will I waste my energy here? Logical, no? The written agreement among the partners is called as partnership deed. Now, if you have the agreement in writing, technically it is called as partnership deed. So wherever partnership deed is mentioned in the question, it means what? It's a return agreement. It's a return agreement. Now, third point, business. A partnership is established for a business. Rather, I would say for a legal business. You cannot form a partnership business for illegal purpose. Okay, sir, come on, let's start a partnership consent. I will smuggle, the gold from Dubai and come. You sell it here, sir. Can we do that business? Illegal business, not allowed. So here, by business, what they mean is 2 points. The business should be legal and the motive should be profitable. Partnership can be created if the motive is legal business and the motive is for profit earning. If your motive is not profit, then you cannot create a partnership. You have to create a trust or a society. If you want to create a partnership, 2 things has to be satisfied. One, it should be legal business. Second, your motive should be to make profit. If your motive is non-profit, social service, then you cannot create partnership. You will never see any NGO or NPO in form of a partnership. They'll be either trust or society. They will never be partnership because it is not allowed. Online people, are you able to follow what I'm saying?
Yes,
Adi,
sir.
Abhishek,
Yes, sir.
Ananya,
Yes, sir.
Akshit,
Yes, sir.
Lakshana, Hari, Idika, Janani, Nishka, Purvi, Ritik, Saisha, Sumanyu.
Yes, sir.
Are you all with me?
Yes,
Yes,
sir.
Yes.
Or deviated and lost somewhere in between?
Yes, sir.
Okay, fantastic. Profit sharing. The agreement between or among the partners should be to share the profits and loss of the business. When you say that we will share profits equally, which means losses also should be shared equally. You cannot have one rule for profit, you cannot have one rule for loss, but possible to have. Let's suppose Virat Kohli says that if there is a profit, it will be 1:1, which means what? If 2 rupees is profit, 1 rupee you eat, 1 rupee I will eat. 50-50. Virat Kohli sir can put a condition also that if loss happens, profit means 50-50. But if loss happens, it will be 75-25. 1/3 I will, sorry, 1/4 I will take, 3/4 you take. Possible. Possible. The agreement between the partners should be to share the profits. The main motive of partnership is to share profit and loss. So that is the main thing that has to be captured in the agreement. So whatever you want to agree, make a note of it. Law does not say that if you're sharing profits equally, losses also should be shared equally. No rule like that. You can have your own rules and regulations. But that point has to be captured in the agreement. Now, if you don't capture it in the agreement, consequences of that I'll explain in the next class. Yes, boss.
The agreement is 75-25, profit sharing profit and loss. So that 25% is he an investor or is he a partner?
There is no concept of investor here. Here, the person who is coming in, let's say Virat Kohli sir is coming in and giving 5 crore rupees as a sleeping partner. He is considered as a partner. Here in partnership, there's nothing term called as investor. The term investor is coming only in the companies. Now, last point. Business can be carried on by all or any one of them acting for all. So this point is very, very important. Business of a partnership can be carried on by all the partners. ABC, all the 3 partners can actively manage the business. Or if 2 partners are lazy, they want to only invest the money and they want to enjoy the, journey, then they can do that. So in that case, any one of them will be acting on behalf of the other partners. So let's say in our example, ABC were 3 partners, B and C were the sleeping partner. So A is the active partner. So A is acting on behalf of all the other partners. So A becomes the acting partner. In other words, the partners are agent as well as principal. Now let's understand the term agent and principal. Agent, principal. Agent means worker. Principal means owner. In simple language, I'm telling. So let's suppose I'm giving you one scenario. ABC are 3 partners. All the 3 partners are equally working hard. So can I say all the 3 partners are worker? So they are technically called as agent. And all the 3 partners have invested. So all the 3 are principal. Owners. Owners means principal. So in this scenario, if all the partners are investing money, if all the partners are managing the business, they are both called as principal as well as agent. So let's suppose A, B, and C are 3 partners. All the 3 of them has invested money. So all the three are partner, all the three are owner, all the three are called as principal. But now A is only working on behalf of all the other partners. So A is the working partner. He's called as an agent because he's the worker. Now, as an agent, A represents the other partners. He means what? The worker. As an agent, A represents the other partner, B and C, and thereby binds them. Them means who? B and C through this act, which means what? In this scenario, agent is a worker. Worker means what? Worker means not the car cleaner, the worker. Worker means the person who is making decisions on the business. Active partner, fine. But I'm telling you, worker is a person who will sign all the contracts in the business. Because B and C are nicely enjoying in Maldives or somewhere. So they'll not come often and do the contract now. So who is doing all the work here in the India? A. So A is the person who is entering into contract. If I have to do a new venture, A will sign. If I have to go and get the loan from bank, who will sign? A has to sign. Now, by this process, A will generate some liability on behalf of the firm. The question that arises is that who will be held responsible? A has taken a loan of 5 crore rupees from the banker. Will A be only responsible or all the three partners are responsible?
All the three, sir.
All the three partners are responsible because as an agent, whatever work he's doing, through his act, he binds all the other partners also. Binds means what? He makes everyone equally responsible. That is default. Am I clear? As a principal, he is bound by the act of other partners. As a principal means what? B and C is bound. Bound means what? Is liable for the act of the other partners. So this is from A's point of view, and this is from B and C's point of view. So agent is a person who makes the decisions on behalf of the firm, on behalf of the principal. So on behalf of the principal, who makes the decision? Agent. So whatever agent says or whatever agent does, it is binding on the entire firm. Entire firm means what? Including the sleeping partners as well. That is called as agent and principal. If you have any difficulties, please ask me now.
Sir, one doubt.
Yes, boss.
Sir, suppose for example, sir, A, B, C are three partners, sir. A gets a loan from the bank for rupees 5 crores, sir.
Okay.
Before getting the loan, he asks the decisions of B and C, sir. They both were like making an agreement that they are not responsible for the liability, sir.
Correct.
And A takes the whole liability, sir. But unfortunately, A can't pay the loan amount, sir. Are B and C responsible, sir, for that?
Okay, that's a wonderful question. I'm little surprised that the brain is functioning in this manner, because had I been in your position, I don't know if I would have got this kind of query in mind or not. It's an excellent question. What he's asking is basically A, B, C are three partners. B and C are somewhere far off. So A is going and taking a loan of 5 crore rupees from the bank, to which B and C has very clearly told, it is your headache. We are not going to take the responsibility. Like that, B and C has told. Now, by orally telling that statement, Sumanyu, B and C cannot,
No, sir, they got an agreement.
Yeah, I'm just coming. B and C cannot be, escape from that. But instead, if B and C is executing an agreement with A, that is apart from partnership deed, there is an exclusive agreement, where B and C are telling that if any loan that A takes, we are not taking any responsibility. Like that, there is an agreement. In that case, the entire responsibility of repaying the money back will be bestowed upon A only. And if A does not pay the money, then the question is, the banker would try to recover this from B and C. So is the banker's act of recovering from B and C tenable or not tenable? The answer is not tenable, because there's a specific agreement. And B and C should do one more thing. When A is going to take all this, from the banker, they should ensure that the banker is known about this clause. So it should not be that you should have this, as a separate agreement. It could be an extended partnership deed. And this, if you want to really be safeguarded, if B and C really wants to be safeguarded, it is better they get their partnership deed registered with the government authorities. Only if they go fight in the court tomorrow, B and C will have something to escape. If it is unregistered partnership deed, B and C will get royally screwed. So if B and C wants to escape the liability of from what A is done, they have to implement that point in the extended partnership deed. They need to get the partnership deed registered and ensure that that partnership deed that point has been published somewhere in the newspaper, so that it comes to the public news. It's not required to be published in a big newspaper. To some extent, just to tell that we are not going to take the responsibility of any loan if this particular firm asks like that. If you want to showcase it to public, that will be a better stand. So tomorrow, even if bank drags you to the court, you can prove the court, telling that court, see, we have agreement in place, and that agreement is registered with government authority. And third, we have informed the public as much as possible that don't give any loan because we are not responsible. In that case, there is a high probability that the judgment will come in the favor of BNC. If not, things can be problematic for BNC. Yes. Once again, ma. Suman, have I answered your query?
Yes, sir. Yes, sir. Thank you, sir.
Then why should we ensure the bank of conduct? Because no salary documents which show as to full disclosure of this.
To get to know everything, only this has been done. Now there is let's suppose A is hiding this matter from bank. But let's suppose Virat Kohli and Dhoni is that BNC partner. So looking at Virat Kohli and Dhoni, any banker, he will come to your office and give the loan and go. Because if Virat Kohli is there, Dhoni is there, and why would anybody not give the loan amount? So when big people are there, definitely looking at their goodwill, they'll come and give you. If Virat Kohli and Mahendra Singh Dhoni doesn't want to fall in trap of this, then they have to inform publicly that, okay, though I'm a partner of this organization, though I've invested it, but any loan taken on behalf of this firm or in the name of the firm, we will not be responsible. Like that, they have to give a disclaimer. What is the proof that that guy is given all the documents? Let's suppose Mahendra Singh Dhoni and Virat Kohli has executed a agreement. If that agreement is not gone to the banker, so banker in good faith, he'll give the loan.
There's no particular rule everything
To some extent should be disclosed. I'm not telling that it has to 100% come to the banker's knowledge. See, Virat Kohli, Dhoni are sitting in some part of the world. We are taking loan from some chiller bank of Coimbatore. So Virat Kohli and Dhoni will have no idea about this. Like this, they'll be invested in 100 ventures. So they cannot go and tell every banker, see, I'm a partner of this particular entity, but you don't give loan. They cannot tell. But they should have all the documents to safeguard them. So who will take care of all that? Lawyer. Am I clear? Okay. So this is the thing, guys. We cannot go so deep. So your questions has to be a little bit limited, so that I can complete the portions faster. I'm okay to answer all these queries, but the problem is if I keep on taking all these queries in depth, the problem is we'll not be able to complete the portions on time, because the target for today was actually, guys, to complete even partnership deed. So now it will take next half an hour of time for me to complete all the 1.5 pages remaining. So you have to go a little bit faster. So your curiosity is there, no? You have to little bit curb your curiosity. That will get answered when you come to the CA journey, if at all anybody is coming in. Okay, online people comfortable?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Initial theory, it is a little bit of here and there boring. I would not say it is 100% exciting, part. But I think with next class we should be done with the theory, and next class onwards itself we should be start with little bit of practical questions, little bit. So once we come to third or fourth classes, the practical aspects will be more, because accounting is more of practical part only. So initial 2 or 3 classes at the maximum for all the chapters will be theory, but otherwise everything is 90% practical only. So any queries here, please? Offline comfortable? Online people comfortable?
Yes, sir.
Yes.
Yes, sir.
Yes, sir.
Yes, people, with that, we put an end to today's session. I'll see you all in the next session, which is on Wednesday, same 7:15 p.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, sir. Thank you, sir.